I bought my first Bitcoin in 2013. My wife and I went down to our local bank. We made a wire transfer to Belarus to buy this Bitcoin. And at that time, the price of Bitcoin was about $125. And then we held on to it. And so over the next few years, that single Bitcoin went up in price to $10,000. I said to my wife, this is the greatest investment we've ever made. We will never see anything like this again. Let's go all in. So my wife and I have a marketing company. It's a media and communication company called Media Shower, as Bennett said. And we said, hey, let's pivot into blockchain. Let's go all in on blockchain. My wife was a little skeptical about this, but I convinced her. And so we did this in 2018. This was when the market was like booming. It was very exciting, beginning of 2018. We went all in. And went up very quickly up to $19,000 and then promptly crashed. And then it got even worse. And over the next few years, just about lost everything. We were down to our last payroll for our company. We had to lay off most of our employees. We had 2 mortgages out on our house. You don't know what that means. That means the bank owns you twice. It was really, really dark. But we held in there. And since then, we have rebuilt this company. It's better and stronger than ever today. And we learned a really valuable lesson along the way. And that is that Bitcoin and cryptocurrencies are a roller coaster. They're extremely volatile. We'll know that, of course, but that has big implications for how we want to invest in these things ourselves. So one of those lessons that we learned is to think about Bitcoin as part of like an overall investment portfolio. So I know many of you are saddled with student debt. I was too. But what I encourage you to do is try to put a little bit away each month. And you want to invest it in something that looks like this, where you have primarily your investments in stocks and bonds, which over the long term have really performed. And you want to have a small slice of the pie in Bitcoin and crypto. In other words, you don't want to bet the farm. You don't want to do Reddit or Wall Street bets. You don't want to make a bet. You want to instead try to think about a balanced approach like this with Bitcoin or crypto as a slice, no more than 10% of your overall investments. All right. So another way of putting that is don't put all your eggs in one basket. These are our chickens. One of them, sadly, was recently taken by a coyote. So I would just like all of us to have a moment of silence for our dearly beloved chicken nugget. Okay, you guys actually went along with me on that. That was very funny. And so what we learned from that is these are the 5 eggs from the 5 chickens. Don't put all your eggs in one basket. In other words, diversify your portfolio. So we put together this daily investing newsletter at Bitcoin Market Journal. This is the website that we run today. You can subscribe for free at bitcoinmarketjournal.com. And one of the things we teach there is what's called value investing. Who knows who this guy is right here? Anybody? Anybody? Go ahead. Mr. Warren Buffett, considered by many to be one of the greatest investors alive. But does anybody know who this guy is? Yes. I'm sorry? Ben Graham, very good. So Benjamin Graham was the guy who taught Warren Buffett how to invest. He wrote this book called The Intelligent Investor. If you're interested in investing or finance, I highly recommend this book. It's a classic. And what they really talk about is when you're buying a stock, and I'm talking about traditional stocks now, I'm not talking about blockchain, but when you buy a stock, you're actually buying a company. So what you want to do is rigorously analyze like a lot of different companies in order to find a few stocks that are really worth your time and worth your investment, worth your money. You want to try to find undervalued companies. You don't want to overpay for stocks. And you want to avoid losses. So again, you want to diversify your investment. And most importantly, you want to think long term. So if I just have one thing that lands with you and sticks on your head tonight, think long term. When you're talking about Bitcoin and cryptocurrencies, also we want to think long term. Don't get rich quick, think get rich and make it stick. Okay, so today, that's the stock market. Today we have this new thing that we call the block market. So that's this whole new world of tokens and cryptos and coins. And I think eventually these will be called digital assets. I think that's going to be the grown-up term for this whole new area that's being created right now in front of us. And this is the most exciting time to be alive. I know you're not used to hearing that. Used to hearing this is the worst time to be alive. I disagree. I think this is the most exciting time because we've got this amazing technology right now that is literally rebuilding the future of the world economy. It's literally rebuilding the world of money, and you can be part of that. You are a part of that right now. So when we look at this block market, you can see that it's even structured like the stock market. We have things like stock tickers, and you have charts and graphs. People talk about these crypto projects like their companies. And I think that's a very useful way of thinking about it, is like companies. When you buy Ethereum, it's a little bit like you're buying shares in the Ethereum company. It's like you're a little part owner in Ethereum. That's the way I think of it. Okay? But it's not quite the same, is it? So on one hand, with the stock market, you actually are a partial owner in that company. That means that you have legal rights. As you have like voting rights and things like that. If the company gives dividends, you receive dividends. And of course, if the company does well, the stock price goes up. If not, it goes down. And you valuable companies for the long term. And that's the whole art of stock picking, is to try to find the next Google or the next Apple. And although the stock market as a whole can be volatile, it's increased about 10% annually since 1926. And that's why we say the stock market is safe to invest in overall, because in the last 100 years, it's gone up about 10% annually. Now the black market, these blockchain cryptocurrency tokens, you don't own anything except the token. You don't have any legal right on that blockchain. And this is important. The token price, just like stocks, can go up or down. You can hold these valuable blockchains and extremely volatile, but it's increased 1,000% annually since 2013. So the stock market, 10% annually, and the block market, 1,000% annually. The problem is, as we showed in that first slide, is the roller coaster. So we don't want to put all of our money in this. Okay, but this is a quick look at just if you would put, what does this say? If you would put, a one-time investment 3 years ago, here's how would it have grown today. The stock market would have grown by about 50%. So $100 would be worth $150 today. And Bitcoin has grown by 735%. So these are the numbers, and the numbers don't lie. All right? Makes sense? Any questions at this point? Okay. So, but as we said, Bitcoin is volatile. And so what we want to do is diversify. And on our website, we put together some of these sample portfolios. So for example, stocks and bonds, this if you went to a financial bonds. Someone apparently is moving at their house right now. And we might use something like this Vanguard Total Stock Market Index Fund. So that's something that basically lets you invest in the entire stock market. And then on the same thing on the bond side. And then again, what we do, we call that the non-believer portfolio, is we recommend just a small slice that is given over to Bitcoin. We call this the Bitcoin believer portfolio. That might be like 2.5%. As an alternative investment, your mad money. Or if you're feeling really risky, you might go up to like 10%. And in our portfolio, we just say, just split that between Bitcoin and Ethereum. Okay, so these are those three portfolios that I'm going to give you right here. And if you want to take a picture, this is the whole investing strategy kind of in one slide right here. This is something that's actually been proven to make money and to outperform the stock market over the last 3 years since we started this. And then the other part of this strategy is we call steady drip investing. It's also called dollar cost averaging. And the idea here is that all of us get very excited about the crypto market when the price of Bitcoin is really high. And all of us suddenly want to sell when the price goes really low. And that's the opposite of how you actually need to behave as an investor, because you want to buy low and sell high, right? So this idea of steady drip investing is that you put away saving out each month, even if it's $10 a month, $50 a month, $100 a month, whatever it is, and you put that into some kind of investment. We're just talking about that portfolio with the stocks, the bonds, and the crypto. You do it every month without fail. If you can set it up as like an auto withdrawal from your bank account, like Coinbase lets you buy Bitcoin automatically, there are other services like that, even better. You want to sort of set it and forget it, so you don't even have to think about it. And it can be any amount. The most important thing is to get in the habit of doing this now while you're young. Because if you can do this while you're young, you will build massive wealth by the time that you're my age. Yes? Your question? Me? Yeah. Oh, no. Oh, okay. You were airing out your hand. Okay. Great. So, so that's the idea behind steady drip investing, and these are the principles that we normally teach investors. And this helps us, like, against FOMO, which stands for what? You're missing out, and FUD, which is
fear, uncertainty, doubt.
Fear, uncertainty, and doubt. And those are the two great enemies that we have as investors, are FOMO and FUD. And again, the steady drip investing, investing the same amount each month, helps us, protects us from ourselves and protects us against volatility, builds long-term wealth, and to date, this approach has outperformed traditional stocks and bonds. Okay, so what I'm teaching you here in these few slides is kind of radical. Nobody talks about investing like this today. Everybody talks about financial advisors, financial planners. They all treat Bitcoin and cryptocurrencies as this weird side thing that they don't know how to deal with. And as a result, you are underserved because you do not have the information that you need to make smart decisions. You don't have an integrated picture of how you're going to build wealth in these things over time. So that's what I'm trying to present tonight. And this is my mission in life, is to help get this across to folks. And it works. So these are those three portfolios I showed you earlier. So this would be the non-believer portfolio, which is basically just stocks and bonds. And 3 years ago, when my book came out, we said, okay, let's say you put $10,000 into that, and then you put $100 each month. Today, that would have grown to about $17,000. If you would put 2.5% into Bitcoin, but otherwise everything the same, you have about $19,000. And if you put 10% crypto into Bitcoin and Ethereum, you have about $25,000 today. And you've done that without giving a ton of risk to yourself. So you've only invested 10% in crypto. So even if crypto completely bottoms out tomorrow, you're still only going to lose a maximum 10% of all your money. Okay, so that's what we want, is like, we want to be able to build wealth, but at the same time we want to protect ourselves against risk, against those crazy bets. What does YOLO stand for? They live once. That's right. Okay, questions? All right, now we'll get into the good stuff. Okay, so what everybody wants to know when I give these talks is like, yeah, but what should I buy? What crypto should I buy? Which ones are the ones that are really going to be profitable in the future? And let me stop and ask, how do you guys make decisions today? How do you get information about what cryptos to buy or to invest in? Anybody? Yeah?
I like copy trading through Arrow Capital.
I'm sorry, say it again?
Through Arrow Capital.
Through Arrow Capital, so that's how you buy them?
Through Arrow.
Okay.
Like one of the leading holdings of funds right now.
Got it. So that's a hedge fund that's investing in these for you?
No. Like, because it's a blockchain, you can see what you're buying and selling.
Oh, I see. So it's,
Once you're doing the market research, you can like copy trade.
I got it. So they've got sort of a transparent portfolio that you can go in and just copy and paste yourself.
No, it's not, because you know their address in the area. You can just plug it into you can see that they're buying.
Okay, so that's Arrow. Arrow, and that's basically a token that you can go look at on Etherscan or something like that and figure out, copy their trades from it. Is that right?
No, that's right. And they trade on the blockchain. And because the blockchain is public, you can see what they're buying and selling.
Okay.
So like you see them like the market price, it might be smart to market price that as well.
And is it ARROW? Is it AERO?
3 Arrow Capital.
3 Arrow Capital. Got it.
Yeah.
Okay. Got it. Thank you. I did not know that. Other things, other tips. How do you guys make decisions?
Go to their subreddits, their websites, try to find their communities, see what they talk about, see if they actually believe in the project and technology or if there's in for a quick buck.
Yeah, great. So that was go to the subreddits, kind of research and do your due diligence on the team and the project and the community around it and try to figure out what's happening. It's great. In the back?
I use a lot of YouTube.
What?
YouTube.
Yeah, YouTube. I am familiar with YouTube, yes. And how do you separate the quality on YouTube? How do you know it's any good?
Well, just like watching different, like, people like and then if I like follow a trend for like, if I see their right, like, more up past rights, this guy's kind of trustworthy, and then 10 other people say the exact same thing.
Okay, so you've got favorites that you're watching, and then you're kind of tracking their record over time.
Well, yeah, but then I also like check out other people's.
Yeah. Okay, that's great. Expert commentary. Other things? Yes, sir.
I mean, if you like aggregate a couple market reports from different firms like Consensus and Sorry,
Yep.
and you look at like market metrics, that we can sort of get a good sense of how bullish or bearish a certain coin is, given a short period of time. So like if you look at Ethereum, you can see how much of its supply moved in the last, let's say, 3 months.
Yep.
And if it's a high amount, it's sort of bullish over the short to medium term.
Yep. So you're using analyst reports like from Masari and Consensus and triangulating on those to try to see the points of commonality or difference.
Yeah, and then aggregating it with like market metrics to sort of validate your own.
Yeah, great. So I think that's a good segue for what I want to talk about now, which is what we call the crypto investing twins, because it really does involve 2 types of research. What was your name? Yusuf. So yeah, I think the way you put that, Yusuf, is like we have a quantitative aspect to this, which is the numbers, and then you have a qualitative aspect, which is kind of the judgment. So that would be like your analyst reports would likely be more on the qualitative side, and you're looking at the numbers or the on-chain metrics, and that's more the quantitative piece. So this is how we do it at Bitcoin Market Journal, and I'll just give you guys a few tools that we use because I think this is how you do better due diligence yourself to make smart crypto investments. So the first idea here is called network effects. And the basic idea is that the more people who join a network, the more valuable that network becomes. So the classic example is the telephone. You only have 2 telephones, not very valuable. But as more people get telephones, you get exponentially more connections between those. And so the world's most valuable companies today, like the Facebooks and the Twitters and so forth, these are all network companies, aren't they? Because every time somebody joins Facebook or joins Twitter, Facebook or Twitter becomes more valuable for all of us. And if you think about that, that's kind of a mind-blowing idea, that this value is being created exponentially as more people join these networks. It's very different from how we're used to thinking about life and numbers, which is very linear. So this idea of quadratic or exponential growth simply means as the number of users grows linearly, the value of those users grows quadratically or exponentially. The network effect. And blockchains all have network effects. One of the most valuable things we can look at is how many users does a blockchain have? And specifically, we want to look at the number of users, and then we want to look at the velocity or how quickly the users of that blockchain are growing. And the great thing about blockchain is it's all transparent, right? Most blockchains anyway. So all of these new DeFi applications, for example, are all out there on the chain, and you can use tools like Dune Analytics, which show you in real time how these various blockchains are growing. So if you look at something like Uniswap, you can see how that number has just exploded. And then you can see something like, what is a set protocol, which has kind of had a big initial interest and then sort of flattened out. So this is really useful for just seeing how our blockchains growing and are they achieving those network effects that they're going to need to really dominate or take over their market. Okay, and then what we can do through sites like Etherscan that we mentioned before, 3 Arrows, right? Like what we can do is go find those number of active users, because all of this is available on chain today using things like Etherscan and Dune Analytics. And then if we take their market cap or their total market value and we divide by the number of active users, we get something like a value per user. So this is a helpful metric. This would not be, I would say, enough data to make me invest in something, but it would certainly be a valuable data point for helping me to invest in something, right? So if I see, for example, that Uniswap is about $4,500 per user, I look at something like Aave and I go, how on earth are people paying $60,000 per user for Aave? So either that's really overpriced or Uniswap is really underpriced, or probably somewhere in between. Okay, so that's just some simple ways of thinking about the quantitative aspect of that. And then the qualitative side. So we have a free tool that you guys can download. It's called the Blockchain Investor Scorecard. We actually have academically published this. It's been peer reviewed, and you can download this. And what it does is it gives you a framework for evaluating these different cryptocurrencies in 5 different categories. And what you do is give them a 1 to 5 star rating, like a Yelp review, in each of these categories. And then all of that kind of rolls up into a final score down here at the bottom. So what this lets us do is really compare apples to apples, because different blockchain projects, as you all know, do completely different things. So it's very hard to look at something like a Uniswap and compare it to Bitcoin, for example. But by asking these questions, it gives us a common framework that we can use to give it a simple rating at the end of the day. Okay, so there are 5, and you can just Google Blockchain Investor Scorecard if you want to download this, it's free. And there's 5 categories that we look at. Market, so that's basically like what market are they serving? Are they like a privacy token? Are they like decentralized finance? Is it a stable coin? What is it? And how big is that market? And is it growing? And can they reasonably capture a lot of that market, what we call a competitive moat? Like a moat around a castle. Can they defend themselves against invaders that might come in and try to steal all of their market share? The team, so who is the founder of the team? I think one of you said the team. I think it's very important to look at the team, like who's on that team. Are they credible? Are they trustworthy? Do they have a track record of success? The tokenomics. So you really want to understand how many tokens are being minted for every one of these blockchain investments. And then how many can be minted in the future. Because if they can continually mint new tokens, it's basically devaluing your investment every time they mint a new token. All right, the same way that our US dollar is being devalued because we continually print more money. And then finally, user growth. So these are those network effects that we talked about. How are they going to get those network effects? How are they going to get enough kind of traction with their user base in order to become the leaders in their industry? That's what I want to land on here. So I think this is one of the most important diagrams I've seen in a long time. We found this on Reddit. The user's name is WarGizmo, who came up with this. And I think it's so helpful because it takes all the most popular cryptocurrencies and it basically buckets them into categories. So in the traditional stock market, we would call this sectors. Like you can buy, like stock index funds that invest in like the healthcare sector, for example. So it's only healthcare stocks. That's kind of what's emerging now with crypto. And I think what the history of technology has shown us is that over time, technology usually consolidates into 1 or 2 big winners. Okay, so like if you think about like operating systems, we really have 2, which are Windows and Mac, right? And you think about search engines, we really only have 1, which is with maybe as a side benefit, Bing, maybe Bing is a number 2, is distant number 2. So that's just the way these things evolve. There's a lot of players at the beginning and they eventually merge or they consolidate or they all sort of boil down, they get bought up by each other, and that is just how it happens. So as you look through this sector list, I'll highlight a few that I think are really worth looking at for the long term here. I think this whole idea of distributed computing, and the way I think of distributed computing is like, these are the platforms that blockchain is being built on top of. Okay, so distributed computing is like the operating systems for blockchain. That's kind of how I think about it. So the clear winner at this point is Ethereum. Like Ethereum is the place where all the exciting development is happening. There's a lot of contenders that are up and coming, like Algorand, which is right here in Boston. We have Cardano, and a lot of people are passionate believers in Cardano and their cryptocurrency. We've got Solana, which was just in the news last week, and many others. I think this idea of distributed computing, that's like this layer upon which all these things are being built. And this is like the early days of computing when like Windows began to rise to dominance. So these to me are kind of very easy investments to make because it's clear that one or maybe two of these are going to win out big time over the long haul. And yeah, maybe those two. Okay, and the next are these exchange tokens. So this would be all of these tokens that allow you to exchange one crypto for another. And I think at the top of the pack here is Uniswap, probably. And how many of you have used Uniswap? Show of hands. So I'm surprised that's like maybe 6, 7 of you. I'm surprised by that. So Uniswap is really, to me, profound and powerful because instead of having to go to like Binance and exchange your Bitcoin for Ethereum or something like that, a centralized exchange, services like Uniswap do it all right from your browser. So you've got like a MetaMask plugin, your little digital wallet up at the top of your browser, and you go to Uniswap and you just connect your wallet right to Uniswap. And then you can swap one token for another. You're really buying one and selling another. And it's all just so frictionless and easy to use. It's pretty crazy. And it's really, I think, going to disintermediate banks. And it really sort of points us to where the future is. So I love Uniswap, but also on this list are things like the Binance token. So Binance is trying to disrupt its model by decentralizing its centralized exchange with its own token. And there's many others in here as well, like SushiSwap and PancakeSwap and all the new DeFi exchanges. Financial services, I think this one is just such a no-brainer that like these are the next generation banks, the big financial services of tomorrow. This is your chance potentially to get in on some of these leading projects that are going to be the world's biggest financial institutions tomorrow. And Aave is one of those that stands out there. And what else? Oh yeah, stable coins. So stable coins, of course, hold their value typically against the US dollar. The leader in this today is Tether, but USDC, which is a product of Circle, which is also based right here in Boston. USDC is rapidly rising the ranks there. And Circle is going to go public later this year, if all goes as planned, which basically means you'll be able to invest in Circle stock using the regular stock market. Circle will be a publicly traded company. But you can go buy their USDC today. But it's not really an investment because it holds its value over time. So if you put $100 into USDC, theoretically, in 6 months, it's still going to be worth $100. So it's good for safekeeping, but it's not necessarily good for growing your investments over there. Okay. So any questions on this slide? Yes, you said.
It's not really a question, but I think Circle is going forward with this round, so I think you can invest from now.
Thank you for clarifying that. So instead of an IPO, an initial public offering, it's called SPAC, Special Purpose Acquisition Company. And in plain English, what that means is they're going to merge with a company that's already publicly traded on NASDAQ, I believe. So what that means is you can buy that stock today for $10. And then once Circle, if and when Circle fully merges with this company, you will then you will own Circle shares within that. And this is totally legal. SPACs are like actually very hot commodity nowadays because it's easier to do a SPAC than an IPO. And we have a whole guide to that. I think if you Google how to invest in Circle, you'll find our piece on that, on how to invest if you're interested. Right? Thank you for that clarification. Okay. Other questions on this? All right. So now I want to hear from you guys. So of all these projects, I would love to hear any that you guys personally find interesting and why. Yes.
I'm a big fan of Theta, video streaming service. It's decentralized. But on their board is, so there are two co-founders, or one is the ex-founder of Twitch and one is the ex-founder of YouTube. So I was like, those two combos of that kind of team, I was buying pretty early on.
So Theta, and it's a decentralized video platform?
Yeah,
Is
so
that
it's like
right?
video streaming. So it's
Video
like
streaming.
Specialized coins up there.
All right, and what, explain to me how that works. I don't know. I've heard of it, but I don't know how that works.
Yeah, so it's all through like peer-to-peer. I'm not really sure, I'm not really sure. I just saw the team and I was like, I need to invest in that. I'm not sure, yeah.
Yeah, well,
forget.
sometimes,
Yeah.
again, the team is a really valuable, and sometimes even if their initial idea doesn't work, they'll pivot.
Yeah.
So if you're impressed with the team, a lot of times that's how venture capitalists do it. If they love the team, they might put money into it, even if they're not sold on the business idea.
Right.
So Theta, you like Theta.
Yep.
That's good. Yes, Drew.
I'm a big fan of Algorand. Kind of boring, but I've been noticing that people are tokenizing a lot of real world assets and building applications on top of it to transact those assets.
Yeah.
So I have to think the token will continue to grow in value.
Okay, so Algorand, again, right here in Boston. It's another one of these blockchains like Ethereum. I guess you could call it like an Ethereum competitor. People are building applications on this. And yeah, I think the investor idea behind this right now is there's all this decentralized finance, a lot of money trading hands right now on Ethereum. But as we all know, Ethereum is very slow and it's expensive. The gas fees are very high. So because Ethereum is kind of hard to use, now the big mad rush is to go to some of these other blockchains, which are much cheaper and faster. They're just more efficient. So Algorand is one of those, extremely fast, extremely cheap, almost free to make transactions. So the idea is that maybe a lot of these applications will start getting ported over to these other blockchains and everybody will start pouring money into those as well. So if you're holding the Algorand token, again, it's kind of like you're investing in Algorand, the company. You're not investing in Algorand, the company, but it's kind of like you are. So that's the hypothesis behind that. That's the idea. Yeah.
So like you're touching upon like right now, layer two, like you mentioned, Ethereum is expensive, like a small one, Uniswap is like 60 bucks in gas right now.
Yep.
So I guess like I don't see a bit of like, what is your perspective on like layer two versus like something like I guess Apple, which has like Apple versus Arbitrum, because Avalanche is an L2 with their own tokens, which participate in that ecosystem, you need to like buy it from people.
Right.
Which some might consider like I guess like a shit coin. And then you have like Arbitrum, which like doesn't have a token, you can just trade over like USD on Arbitrum. So I guess like what is your take on scaling solutions and like should scaling solutions make money to incentivize people to use their network, or should it always be denominated?
Yeah, there's a lot to unpack there. So I think the first question is, can Ethereum be made more efficient? That's the scaling solutions question. Yes, and I think it will be. And I think because there's so much money happening on Ethereum, that those solutions will arise. I trust that that will happen over time. Somebody else may overtake Ethereum in the meantime. That happens all the time in the history of technology, right? Somebody that looked like they were going to clearly be the winner, like MySpace and social media. None of you even know what MySpace is anymore. Facebook just overtook them. So that could happen. But right now, it still looks like to me, Ethereum is the front runner and people will figure out the scaling solutions as we go along. So then your questions about like Avalanche and what is it, Arbitrum? Arbitrum, yeah. I get so overwhelmed because there's a new token launching every day, especially in the DeFi space. And I highly recommend, if you don't subscribe to Camila Russo's newsletter, it's called The Defiant, DEFIANT, The Defiant. It's all about DeFi. Camila Russo, it's really terrific. She constantly covers this whole emerging new world of DeFi, and they've got a lot of good tutorials and stuff like that. Camila Russo also wrote one of the best books on blockchain called The Everything Machine. Is that what it's called? The Everything Machine? It's the history of Ethereum. Can somebody check that for me? Make sure that's what it's called. The Everything Machine, I think. The history of Ethereum, and it's so good. I highly recommend it, even though I can't remember the name. And I don't know how many of those are going to shake out. It's too soon to tell. I don't invest in them though. I don't invest until they get some critical mass of users.
Arbitrum, I think right now, right, it has the most total value of all companies from Ethereum.
Right.
So it's like, it has more value right now than AVAX.
Yeah. So for those watching online, you're saying that Arbitrum has more total value lock than any other DeFi project today.
It's not a DeFi project, it's a ZK.
Yeah. So these things are tempting. They're tempting even for me, right? To get in, because clearly it's where all the action is, and clearly you could be earning tokens for participating early on. But again, I really suggest taking a longer view, doing due diligence, and waiting to see, like, if it's really a good project, it's still going to be around in 3 months. So mark it on your to watch list and kind of track how that happens over time. I think that could save you a lot of money. Was there another question over here? Okay.
It's the infinite machine.
The Infinite Machine, thank you. Camila Russo, The Infinite Machine, the history of Ethereum is so good. They're going to make a movie of it, I guarantee you, it's so good. But that will tell you a lot about how this whole industry has developed. Do we have online questions as well that we should ask?
Not seeing any.
What's that website called from the previous slide? I don't know. I did just give this presentation in a podcast, so we can include that afterwards. We'll have all the slides available. Oh, it was probably either CoinMarketCap, which is to get the market caps of everything, or Dune Analytics, D-U-N-E, like the #1 movie at the box office, Analytics. No relation.
I got a question. Say you want to YOLO and you just want to go 100% into crypto.
Yeah.
What is your asset allocation look like?
So basically you're saying, say I don't want to take any of the advice that you just put out there, and I want to YOLO it all. What would I do? We are, well, at Bitcoin Market Journal, I'll give you a preview because we're coming out with a new portfolio next week, actually. And it's, as opposed to the ones I shared with you, which are balanced and smart long-term investments. This one is like, yeah, but I've already got a crypto portfolio, and just, what do you think about allocating that? And the 4 that are in there, if I can remember the allocation, I think it's 60% Bitcoin, 20% Ethereum, and maybe 10% Binance, BNB, and then maybe 10% Uniswap. Is that 100%?
Yeah.
60, 20, 10, 10, something like that. We might tweak those a little bit, but I think that's what we're going to do. So those 4 we feel really good about. They've gone through all this due diligence I just shared with you. But again, do your own homework. Don't invest more than you're willing to lose. Don't take my word for it. Like, make your own decisions.
But we have about 7 minutes left. We're going to open up to general questions.
Yeah, general questions. Anything we've talked about tonight? Yeah.
Just out of curiosity, why are you so big allocations for Bitcoin? What is your, like, you mentioned that you have done a lot of diligence on it, so I was wondering what your investment thesis is behind that.
Yeah, the question is, why so much on Bitcoin? Why do we love Bitcoin so much? There's a number of reasons, and you can read our reports on this to unpack it a little more. If you go to Bitcoin Market Journal under digital asset rankings, it's right there. It's #1. It's been around the longest. It has the most brand recognition. It has the most stress testing. It has the most users. It has the most market cap. It has the most global adoption. As you know, El Salvador just announced they're accepting Bitcoin as their national currency, which is insane. Crazy experiment. But Ukraine did something too. Yeah. So it is the gold standard. no pun intended, because a lot of people think of it like, digital gold. They talk about it in the same way they talk about gold. There's a limited amount. They're never going to make any more once it's all been mined. And so because of that, people think it will go up in value overall. I don't know that it will. I don't know. But, I have invested that way. I do believe that it's going to. But nothing is for certain. And that said, we think of all of these different assets, it's the one with the best track record and the most reliability. So yeah, that's why we have such a big allocation. Is there a question up there? Yes.
So for beginners, like what app do you suggest we use to trade crypto?
Yeah, so for beginners, what should you use to trade crypto? Well, first of all, do you mean trade or do you mean just buy? Like just go buy and hold?
Buy and hold.
Yeah. Yeah, because there's two different ways you can do it. You can trade, which means you're constantly trying to buy and sell. Some people every day or every hour trying to buy and sell, arbitrage the market and things like that. We don't do that at all. Basically buy it. So we buy it, think about it as a long-term investment over the next 3, 5, 10 years, maybe 20 years, 30 years. Maybe this is a retirement fund. You're starting right now. Your future self thanks you. But I think the easiest way to get started for most people is Coinbase, so coinbase.com. It's, again, that's sort of the gold standard to me of crypto investment websites. And it's a publicly traded company. You can just go buy Bitcoin. You can also, like I said, set up that monthly steady, so it will withdraw a little bit from your account each month and buy a little bit of Bitcoin regardless of what the price is. I think Coinbase is a great example or a great place to go. Binance is another place. Any other suggestions on that? Where to buy?
So like Coinbase, like especially for like I guess like broke college students who are not investing like much into like $100 or less.
Yeah.
There are like a lot of fees.
Yeah.
So what do you suggest like get past that like the major fees?
Yeah, there's so many fees in crypto, and we've written a lot about this. That's the other reason I think trading is actually very difficult to do for most of us, because you're paying so much in fees every time you're like buying and selling crypto. And also you have a tax liability. In other words, every time you make a profit on every time you make a profit on crypto between when you bought it and when you sell it, you actually owe the IRS tax on that profit that you've made. So for all those reasons, it makes more sense to buy and hold over the long term and only cash out when you really want to cash out and you're ready to pay the tax. So in terms of fees, I think, again, not doing a lot of moving around of your portfolio, but trying to just buy in small increments and keep it there over the long term. It's probably the best advice. Yeah.
There are 2 questions online. The first one is, do you think cryptocurrencies will survive intervention by governments in the long run? Best example being China.
I'll answer that one. So the question, thank you for the online group that's here today. And do we think cryptocurrencies will what was that, survive government intervention? I don't know. It is a big question. I mean, the US government could outlaw Bitcoin tomorrow, and that would be, that would make the whole crypto market crash. I don't think that's likely, but I think that could happen. There's a small chance of that. But I think overall, governments understand there's something really big happening and they want to somehow participate in this. They just don't know how. And all of them are sort of watching each other to see how it's going to shake out. And nobody wants to be the first to make a bold move. But at the same time, everybody understands that we're kind of all in this together because it's a global economy. So long term, I think we'll figure it out with governments. That's the answer. And longer term, I think we will end up having a one world money. So that's my vision of where all of this is headed. Is I think we're finally going to have a supranational currency, which means a one world currency. I think it may happen during your lifetime. Very exciting. And I think we'll still have our own sovereign fiat currencies. We'll still have a US dollar and a euro, but we will have a one world currency that sits on top of all those or supersedes all of those. I think that's probably the logical outcome of all this. And I think that would be a great good because we live in a global economy today. We're one world. We're all connected. We're all one human species. So it would really help us to have one world money as well.
Sorry.
Other question?
Yeah, there's another question online. Can you talk about Solana and its rise and fall?
Solana and its rise and fall. I saw this story, but I actually don't know anything more than they went down last week and had to somehow scramble. Does anybody know the story behind this? Yeah.
Basically, like they just had, there's like they had like an IDO, which is basically, there was like a launch of a product, and there were a bunch of bots that were trying to bid to like get a spot, and it just overloaded the system. And
Yeah.
like, I guess like they're like for some other validators, they weren't on best equipment. They just got like flooded with a ton of transactions, and so
Yeah.
like those guys went down. And then like I think it was like 60%, only like 40% of the validators were up, basically.
Okay, so basically they overloaded the network.
Yeah.
Took it down, they had to bring it back up. Yeah, so all these things are growing pains. They're all stress tests that we're learning in these early days. So the final thing I want to leave you with, because we're at 7 o'clock here, I really just want to encourage all of you to be fearless in asking questions in this space. And one thing I learned early on, because I am not despite my tie, I am not a financial, I don't have any financial background. I started as a comedy writer. And then I became this internet entrepreneur. I ran this media company. I got involved with Bitcoin, and I ended up like giving talks like these. And I did it by just telling myself, I'm not going to be intimidated to ask questions. And you heard me ask a lot of questions tonight. I only know a small fraction of all this stuff and all these projects that you see out here. And so don't give away your power to other people. I always say, if somebody doesn't explain something in blockchain in a way that I understand, it's their problem. They didn't make it simple enough. So continue to ask questions, be relentless in that. Don't be stupid. Don't feel like you're being stupid, because it's all moving very quickly, and we're all learning this together. And then your final principles that I want to leave you with are like, think like an owner. Do this rigorous analysis of all these different blockchain projects to find a few valuable ones. Try to find them on sale. Try to find ones that are undervalued. Try to avoid that FUD and the FOMO that make you want to jump in when something's super hot. Diversify your investments. And again, this is a long-term thing. You're paying off student loans, but think about like, how do you create that total pie? And finally, don't think about getting rich quick. That's the way to lose a lot of money. Think get rich and make it safe over the course of your life, and use that to make the world a better place. Use your wealth and do something that's good for the rest of the world. Follow your passion and to make the world great. All right, and this is the final crypto investing kind of algorithm that we use. So you can take a picture of that if you want, and happy to stick around and answer any other questions that you might have otherwise. All right. That was get a QR code down front to check in before you go. Hey, I'm so sorry. I forgot